Hey, what's up guys? It's Ezekiel Chu here. So let me ask you, how many times have you drawn the zones? You plan your trades, but then you just keep getting stop out. Or worse, you keep missing the moves that takes off without you. I mean, it's frustrating, right? The problem? Most traders, they do know what the supply and the demand zones are, but they have no clue on how to use them properly. They just draw the boxes on the charts without knowing exactly where are the best positions for you to enter your trades with the highest probability, right? But today I'm going to change that, right? I'm going to show you how to use the supply and the demand zones the way the smart money does, such as the banks, the hedge funds. This is a masterclass on supply and demand, and this is the only video on supply and demand trading that you need to watch. Okay, so first off, before diving into the supply and demand zones, you need to understand what is a range or consolidation, because this is going to review how the market really moves. A ranging market, it occurs when the market moves sideways, right? And without following a clear trend. So meaning that it is not consistently making higher highs or higher lows, or lower highs or lower lows. It simply just moves sideways without any clear upward or downward direction, like this. So in a ranging market, the price is mainly moving sideways, bouncing between the high and the low level without a clear trend. To balance it out, what is it doing is that we got to actively search for a fair value at the equilibrium point when price is within the premium zone. So it means what? It means that this asset is considered too expensive. So it becomes less attractive for buyers. So as a result, what happens is that there will be an increase in supply to push the price down as the sellers step in. So now, when price is now within the discount zone, so this asset is now considered what? Is cheap. And then it becomes what? Attractive for the buyers. So this means what? That the demand starts to increase, and then it pushes the price up higher as the buyers step in. So now, the real question is, who has the power to push the price out of this range? And the answer, it is the smart money. The banks, the hedge funds, the trading institutions, right? So when price, it breaks out of the consolidation, that is your clue, right? So the institutional money has now entered the market, and that creates a major imbalance between the supply and the demand. So here's what often happens next. The market, it breaks out, and then it comes back to retest the breakout zone, right? So this fills up the remaining orders before continuing the move. So this happens because of what? The concept of auto flow, where the market fills up the remaining orders before moving further. So this is a part of this 4-stage process. The 4 phases of price movement are range, initiation, mitigation, and then continuation. All right, so now a supply zone is formed when price breaks down aggressively from a consolidation. It breaks down, right? So then it forms a supply zone. So what is our job, right? It is to wait for what? Price to return to that zone to mitigate all those unfilled sell orders at there, right? So there's a lot of unfilled sell orders at there. And then what? We look to enter short, right? We look to sell. So this allows what? This allows the market to fill up the remaining sell positions, and then it creates the opportunity for us to enter a sell trade and to capitalize on the continuation of price movement, right? So now, on the other hand, the demand zone is created when price makes a strong break out from a consolidation to the upside. So this signals an increased buying pressure, right? So once again, what is our job? Is to wait for price to return to that level, mitigate the remaining buy orders, and then we enter a trade to follow the continuation of price movement. So this is where we enter for a buy. Right, so now before we dive into all the charts, here's a quick tip on spotting supply and demand zones. We look for price imbalances. We are focusing on price breaking out of consolidation, right? So it's shifting from a balance to imbalance, right? This shows that the smart money has now entered the market. So this means what? That we are trying to spot the supply and demand zones, right? We just need to identify one of these 4 scenarios that you see on the screen here. When we are trying to spot your supply zone, we need to see price aggressively moving down, right? And then it stops for a little bit and then it drops down further. This is pretty much the supply zone. All right, so now another type of supply zone is formed, not just in the trend continuation, which is what we saw. Is also formed when price reverses the direction. So you see price move up, consolidate, and then break out of the consolidation to the downside, which is a reversal. This tells us that the area where price reverse is our supply zone, right? So now vice versa for demand zones is that price goes up, pause a little bit, consolidates, and then continue moving up higher. So this is clear-cut trend continuation. And then for reversal, this is where price goes down, consolidate, and then rises again. So this is where it creates the demand zone, where the buyers take control. Right? So now in the end, the market only moves in 3 ways: up, down, or sideways. So you wouldn't do other stuff like moving in a, I don't know, in a circular shape or triangle shape, etc. Right? So therefore, when it comes to drawing supply and demand zones, here's the general way to do it. Now, you mark the entire consolidation first, right? That price has just broken out of. So in this case, you see price consolidating before what? Breaking to the downside, right? So we can identify the supply zone around this area, right? So we just want to find the consolidation, the entire range over here. And then we draw a box from the highest to the lowest point. So this marks the entire consolidation, right? And in this scenario, this creates a what? A demand or supply zone, a supply zone. Because why? It breaks downwards. So now that price has broken out of this supply zone, it indicates what? There are still likely and is always going to have unfulfilled selling orders within the zone area. So we can expect price to pull back. It mitigates the supply zone before continuing its way downwards. All right, so this is where you can look for selling opportunities. So now, here's the thing. The general method is not enough, right? We cannot just like plainly wait for the entire area to place a sell. So now, let's take it to the next level. So now, to be a highly profitable zones and to have a zone that has a high probability, we're gonna need what? This supply and demand zone are gonna meet 2 conditions: the break of structure and the flip zone. First off, break of structure. So now, price doesn't just go straight up or down. It goes up, it pulls down a little, and then it goes up again, right? Breaking the last high. So it keeps going up higher. So now, in this case, at that point, it creates a what? A break of structure, showing that the demand zone caused the break, right? So this makes it a higher probability zone. In another example, right? When supply and more supply enters the market, it pushes the price down before creating a break of structure. So making that area a very solid supply zone. So what you can see from this demand and supply is that we are now not marking the entire area, but that specific area for the pullback itself. When price reaches that zone, that is not only a discounted zone, that is a high probability zone as well. Now, what if price changes the direction from a downtrend to an uptrend? So this is what we call flip zones. All right, so what happened here is that price moves down, it pulls back before dropping further. It creates the what? this bearish break of structure, right? And then it forms a supply zone. So what happened next is that price then what? It pulls back up, it gets rejected from this supply zone and starts dropping down. Right? Good. All so far so good, right? So still in a downtrend. And then what happened next is that price, instead of going all the way down, it shoot back up, it broke through the last strong high. So at this point, it confirms that the market has now officially shifted from a bearish trend to a bullish trend. So now, at that moment, what happens? The demand zone is formed, which drives a price to break past the last high. So this is where, most traders are, oh, he's making high lows, he changed the direction. But now you now recognize where are the demand zones, which creates an area of value for you to plan where is the highest probability area for you to wait to enter your trades. You don't just want to keep chasing after prices, right? You want to wait for price to enter at optimal areas. So now, to continue. Once price goes up, right, and breaks above the last high, right, it causes the previous supply zone to now fail. And this is what we call a flip zone. All right, so now the flip zone continues to form after that, leading to a failed reaction like this, right? So once again, if the supply zone has done its job and done its job right in the first place, the price would have gone down and dropped even further. But because it failed to do its job, this creates a failed reaction, causing the supply to now flip to demand. So this tells us that this demand zone is now a high probability zone because it caused the supply to now flip into a demand, right? So now, once price have reached these high probability zones, you don't just go ahead and just, okay, I'm just going to go ahead. I'm just going to randomly enter at that zone right now. No. You can do two things. Number one, once price reaches the zone, all these high probability zones, you wait for candlestick pattern, right? Candlestick pattern confirmation at these zones, such as hammer or engulfing patterns. So this is like an add-on. Or number two, if there are no candlestick patterns, you can drop to a lower time frame. Assuming, let's say you saw this in a higher time frame, right? You can drop to a lower time frame and find a break of structure there that hits up. For example, when it's retracing down, right? You find a break of structure that hits up. When it's retracing down to the demand zone in the lower time frame, it's going low, high, low, lows, low, high, low, lows until there's a break of structure to hit its way back upwards. And that break of structure in the lower time frame is your entry point. All right, so for this, you can watch my other video, which is it's called the Forex trading strategy video, for the full details on that. All right, so now, all right, and there you have it. You have just unlocked the core principles of trading the supply and demand zones like a pro. Right, so these are not just theory. These are the exact methods that I use in my own trading, right, to spot all these precision areas, zones for entries to get the high RR trades. Good? All right, so now let's recap. Right, so now price moves sideways when there is no clear trend, and the market balance out to find a fair value at the equilibrium points. So supply zones are formed when what? When price drops aggressively after a consolidation. Demand zones, on the other hand, is where price rises aggressively after a consolidation. Right? So price often retests these zones before continuing its move. High probability zones are used using what? Break of structure, and also the flip zones to confirm and trade the shift in market direction. You can then use candlestick patterns such as the hammer of engulfing patterns for confirmation entries. You can also drop to a low time frame for entry using the break of structure. So thank you so much for watching. If you enjoyed this video, please give it a thumbs up, right? It really helps to keep the channel growing. And if you are new here, don't forget to hit that subscribe button and turn on the notification bell so that you never miss an upload. So we also love to hear from you, right? Drop a comment below and let us know what you think or what you'd like to see next. I mean, your support truly means the world to us. It keeps us motivated to bring you awesome content every week. And if you're keen to learn more, I've created a free 5-part comprehensive training where I show you exactly how I trade using my lifestyle method. Link in the description below.